Okay, hello everyone. So today we are going to have our 25th set of paper. Okay, again, LCCI Level 3 Financial Accounting. This paper is for June year 2017, our 25th sets of paper. 100 marks, 5 compulsory questions. Let's start. Question 1. Simon, the sole trader, provided the following information about rent received, insurance, and then some other information. State 2 purposes of preparing a statement of profit or loss. Of course, we want to calculate, or know the amount of profit or loss for the current year. Okay, and also sometimes it's not only to know the profit, but to know how much income we have, or how much expenses we have, cost of sales, so on and so forth. And then we have the rent received account, insurance account, and some other questions. So this is related to other receivables and payables. So 18 marks, 2 accounts. So let's see what is given to us. Very short information. So we have opening balance for rent received and insurance. This is an income and then an expenses respectively. And then at the end of the year, we know something about the rent and also for insurance. Let me put the balance first. 750 debit and then 300 credit for insurance. So rent received account is in the credit side because it is an income account. Year 2016, it is a debit balance. Year 2016, 1st of April, the balance brought down, we have 750. So rent received, debit side, it means that income in arrears, or interest accrued, someone owe you something. And then for insurance account, insurance account is in the debit side, because it is an expense account, but then it has a credit balance. Year 2016, 1st of April, the balance brought down. Here it is a prepayment. And then 300. So rent first. Rent received during the year 3750 received. Rent of 900 for 3 months ended 30th April was owing. So 900 for 3 months, that means 300 per month. And then owing. Owing till when? 3 months ending April. That is, you haven't received for February, March, and April. That means 2 months income in arrears, 600. 600 income in arrears. So it would be on the same side. So amount received is in the credit side, debit bank, and then credit rent received account. Year 2017, 31st of March, we have received 3750, and then owing 600. This is our balance carried down 31st March. So 600 here. Balance brought down. Again, it is income in arrears 1st of April, year 2017. Okay, so the remaining item is the transfer to profit or loss account. Okay, so 3750 plus 600 minus 750, that would be 3600. Okay, statement of profit or loss. Okay, so let us go to the next account. Insurance paid during the year 2900. This included 800 insurance for 4 months ended 30th April. Okay, the same. Okay, but then this time it is a prepayment because it included a certain amount. Okay, so for this 4 months, 800, that means 200 per month. Okay, and then it is paid for January, February, March, and April. Okay, that means 1 month prepayment. How many months prepaid? Okay, 200 adjustment. Okay, so let us go here. Okay, so we have made a payment of 2900 in total. Okay, 31st March, and then at the end of the year there is a balance of 200 here, balance brought down. Okay, again a prepayment, year 2017, 1st of April. Okay, and then the transfer to the statement of profit or loss. Okay, that would be a prepayment. Okay, no wonder I think it is very strange. Prepayment. Yes, I'm sorry about that. Let me see, a prepayment. Yes, it is a prepayment, right? Prepayment. Yeah. Prepayment is in the debit side. So here, sorry about this one. This is an accrual. Okay, because I have made a wrong judgment on the opening balance. That's why when I work on the closing balance, I also mix up. Okay, so here, let me write debit, and then we have here 200. Okay, this is a balance brought down, prepayment. Year 2017, 1st of April. Okay. 200 here. Okay, so 2900 minus this one. Okay, yes. 2400 transfer to the statement of profit and loss. Okay, and here you have the balance carried down. Okay, so sorry about the mistake. Okay, nearly got this mistake. Okay, then this expression actually help you locate your own errors, because when I look at it, okay, and I see prepayment in the credit side, I feel very strange. Okay, that's why. So next one, explain why adjustment were required to the amount paid for investment. Okay, so this usually you have to mention the accruals concept, okay, or the matching principle. Okay, and you have to say that if you do not, okay, if you don't adjust, then expenses will be overstated. Okay, that means profit will be understated. Okay, and your calculation would be inaccurate. Okay, and sometimes these inaccuracy, these errors affect your decision. Okay, next, state two accounting concept that should be applied when preparing financial statements. So I have mentioned across two other concepts, okay, maybe. So consistency, okay, if you are calculating depreciation, okay, prudence, if you are looking at irrecoverable debt, okay, going concern, historic costs, okay, etc. Okay, if you are working on inventory, okay, and non-current asset. Okay, so 18 marks, finish. Okay, let us go on to the next question, question 2. Okay, I think this is the statement, the extended trial balance. We have 1, 2, 3, 4, 5, 6, 7 items. Let us take a look. Okay, two purposes of trial balance, calculate closing inventory, yes, and then the extended trial balance. Okay, 22 marks. Two purposes, okay, again, every time you're asked about this, okay, to find the arithmetical accuracy, okay, to check accuracy, to check whether the totals of the debit side is equal to the totals of the credit side, okay, and to assist the preparation of financial statements. Okay, calculate closing inventory. Let's see what is given to us. Inventory was valued at 45,000 and did not include the following. Okay, so this is IAS2 about inventory, lower of cost or NRV. Okay, so let's see. Product A, the cost is 5 and it can be sold at 6.5 after repairing cost of 1. So NRV is equal to 5.5. Okay, no impairment. So the inventory is equal to 5 times 100, that is 500. Okay, we include this amount. And then the next one, product B. The cost is $8. It can be sold at 9 after repairs costing 2. That means NRV is equal to 7. Okay, we use 250 multiplied by 7. Okay, that is 1750. And the total would be 47250. Okay, so there are no other items related to inventory. Okay, so 47250. Okay, calculate, of course. Okay, 47250, you show the two adjustment. Okay, plus 500 plus 1750. Inventory, statement of financial position, okay, debit, and then credit for statement of profit or loss, 47250. Okay, so next one, item 1 done. Item 2, depreciation charge for office equipment during the year was 3,000. Okay, so given to you directly, 3,000 for office equipment, but then we still have one more item. Let us finish this as well, 2 and 3. Office equipment costing 5,000 with accumulated depreciation. 1,000 was sold. The proceeds 3250 was received by check. Okay, so many things. So let us do these two items together. Okay, and we still have one more thing. Okay, that is the purchase of office equipment. Okay, so many things at the same time. Okay, 10,000 purchase, and then disposal 5,000, 1,000, and then the proceeds 3250, and then depreciation. Okay, very nice. Okay, so office equipment, first of all, we have a purchase of 10,000. Okay, office equipment is in the debit side, so if we want to increase, okay, here, okay, and then not yet recorded, right? Paid by check. Yes, paid by check. Okay, so 10,000 here. Okay, and disposal 5,000 here. Okay, credit because you want to reduce, so go to the disposal account, 5,000. Okay, and then accumulated depreciation. Okay, reduce it by 1,000. Okay, and then receive 3250 for it. Okay, receipt 3250. Okay, so these two added together, okay, it will go to the credit side of the disposal account, 4250. Okay, giving a disposal loss of 750. Okay, the net amount. Okay, so disposal done, purchase done. Okay, now we still have the 3,000 accumulated depreciation. Okay, add to accumulated depreciation, and then this is the depreciation charge for the current year. Okay, so next one, item 5, goods taken for personal use, 250. Okay, so goods taken, of course, it will go into drawings. How much? 250. Okay, and then it will also go into purchases as a reduction, 250. Okay, next one, irrecoverable debt, 750. Okay, and then allowance for doubtful debt created, 1325. Okay, again, you are not asked to calculate. Okay, if I'm the one to set the paper, first of all, I ask you to calculate depreciation. Second, I ask you to calculate the new balance for the allowance for doubtful debt. Okay, anyway, okay, it's nice that you don't need to calculate. Okay, so irrecoverable debt as an expense, 750. Let me use another color. 750, and to reduce the amount of trade receivables, 750. And then the creation of allowance for doubtful debt. So you can see this is the balance, this is the adjustment. Okay, so the balance 1325, and then because it is a creation, it is actually an increase. An increase is an expense, so debit 1325. Okay, so we have finished all. Okay, remember to give the total. Oops. Okay, so I have calculated 71825. Let us confirm. Yes. Okay, so 22 marks, question 2, done. Next question. Partnership A, B, and C. Okay, Aaron, Beto, and Cassia are in partnership, sharing profit and losses equally. The partners provided the following information. Okay, the opening balance 1st of April year 2016, opening balance of capital and current account. Okay, Cassia debit a negative balance for the current account. Okay, on 31st March, Cassia decided to leave the partnership. Goodwill was valued at 20,000 for each partner. Okay, that means 60,000 in total. The partners decided not to maintain goodwill in the partnership books of account. The partners agreed to settle Casia's account by paying 40,000 by check, with the balance being treated as a loan to the partnership. For the year ended before the profit, for the year ended 31st March, the profit for the year before appropriation 51,000, interest on capital 9,000 each. Okay, so I think we have to work on appropriations and then the retirement. State 2 advantages of forming a business partnership. Okay, you can have more equity when compared to sole trader. Okay, you can have shared workload. Okay, more fun. Okay, shared workload. B. Calculate the profit due to each partner on 31st March. Okay, so 51,000 as the profit for the year before appropriation, interest 9,000 each. Okay, and nothing else. Okay, then share of profit. Okay, so calculate 51000 minus 9,000 multiplied by 3 and then divided by 3. Okay, that would give you 8,000 each. Prepare the capital account of Casia. Okay, so it skips steps in between. Okay, you have to know what else you have apart from the answers that you have to write. Okay, so Casia, year 2016, 1st of April, you have opening balance. Okay, this opening balance 75,000, and then you have current account of 3,400 negative. Okay, so 75,000. Current account 3,400 negative. You have your interest. Okay, you have your share of profit. That is, you have a current account balance of. Do you have any drawings? 34,000, 9,000. 30, let me see, 34,000 minus, okay, 17,000 plus 3,400. Okay, so this should be 13600. Okay, current account. Okay, this is year 2017, 31st of March. 13600, current account of Casia. Okay, after that you have, of course, okay, the goodwill. Okay, calculated for you 20,000. Okay, so these three things will be settled. Okay, the settlement, year 2017, 31st of March. First of all, you are given a check of 40,000, and then the rest being transferred to as a loan from Casia. Okay, so all settled. Okay, next. A discussion question for 5 marks. As Cassia has left the partnership, the remaining partners are thinking of forming either a limited partnership or a private limited company. Discuss whether the partners should form either a limited partnership or a private limited company. Okay, so these two things are very different. Okay, because for a limited partnership, okay, the limited partner is only responsible for providing capital. Okay, and this partner, this limited partner, is not related to the operations of the business. Okay, so if you are working as a 3-man partner originally and then one partner left, okay, how about the remaining 2? Are they sharing the workload, or is only one of them actually working? Okay, I do not think this is the case, because if only one partner is working, that partner should have received a salary. Okay, if not, it would not be fair. Okay, the same investment and then same interest on capital, same share of profit, but then he worked all the stuff. Okay, not fair. So I do not think in the original partnership only one is working, okay, and the other one is just for providing funds. I do not think so. So I think it would be better to form a private limited company, okay, where you have the benefit of limited liabilities protection. Okay, you have more formalities. Okay, you can invite others to join your business by investing as a shareholder. Okay, and then maybe, okay, if you are working well, if the business is working well, then you further expand it by going public. Okay, so I'm not going to write down the answer, but I've explained what I think is important. Okay, so next one, explain 2 ratios that can be used to measure a business liquidity position. Okay, so liquidity, of course, the current ratio, and then the asset test ratio. Okay, the 2 are very similar. One is whether you can repay liabilities using your current assets. Okay, and other one, the same. Okay, you repay your liabilities without liquidating inventory. Okay, without the need to sell your inventory. Okay, so this one is a more rigid requirement on the amount of cash you have, the amount of non-current asset, the amount of current asset you have for the repayment of liabilities. Okay, so that is for question 3, and we still have 2 questions after our break. Question 4, single entry. Yes, I think so. Okay, calculate trade receivables, trade payables, and then statement of profit and loss, trading section only, and then statement of financial position. So I would then consider it as a sole trader question. Okay, and then question 5, of course, the statement of cash flows. Yes. Okay, and then evaluation questions. Okay, so let's take a break. Okay, let's continue. So we have this question, single entry and sole trader. Okay, we have to state why a bank would be interested in the financial statement of a business. Okay, so to see whether it's credit worthy, trustworthy, okay, and when money are lent, okay, will the bank be able, will the business be able to repay the amount of loan? Okay, state why the government will be interested, okay, to make sure the correct amount of tax is paid. Okay, stakeholders. Okay, stakeholders' interest in the financial statements. Okay, so and we have to calculate for the year end trade receivables and trade payables. Okay, and then also the statement of profit or loss, the trading section. Okay, so let's see what is given to us. Aisha provided the following information. Okay, these are the opening balances. Okay, so with these opening balances, we will be able to calculate the opening equity. Okay, or actually the equity is given to you directly. Okay, so we don't have to calculate. Allowance for doubtful debt, bank, inventory, machine costs, accumulated depreciation, trade payables and receivables. During the year ended 31st March, total sales given to you, total purchases given to you. Very nice. So you don't have to, calculate those things. Okay, all purchases and sales were on credit, and then we have markup of 20%. So I don't know if you notice, if there is no other information that is related to the adjustment for sales or purchases, then you can prepare the trading account already. Okay, sales, or you already have sales. Okay, you already have opening inventory, purchases. Okay, how about closing inventory? You don't have, but then you have goods sold at a 20% markup. Okay, if you have markup, you can calculate cost of sales, gross profit. Okay, and then closing inventory. Okay, but let's read on. The bank summary, trade receivables, receipt from trade receivables, and then drawings, purchase of motor vehicle, office expenses, and then trade payables. Okay, these are payments. Okay, so after this, we still have some additional information. So let's see. Profit for the year to revenue. Okay, given to you 3% on revenue. Okay, so you have net profit to be put in your statement of profit and loss. Okay, you have drawings. Okay, you have irrecoverable debt to be written off. Okay, so that would affect your closing trade receivables as well. Allowance for doubtful debt 510. Depreciation was to be charged 10% on all non-current assets. Depreciation policy is to charge full year depreciation in the year of acquisition, none in the year of disposal. Okay, nice. So let us calculate the trade receivables and payables. Okay, so again, trade receivables. Okay, let us do it here so that we don't have to turn the page. Okay, they are the same. Okay, trade receivable, trade payables. We have the opening balance. Opening balance being what? 14500, trade payables 18750. You have the credit sales plus 240,000, and then you have total purchases 196500. Okay, and then after that you have the receipt from trade receivables 235000, and then for payments to trade payables 190,000. You have the closing balance for trade payables already, but then for trade receivables, you still have irrecoverable debt of 500. Okay, so 500 minus 500. Okay, written off, so negative. So let's see. 145, 240, 235 minus 500. Okay, you have 19,000. Okay, and for trade payables, 25250. Okay, so this one done. Let us move on to the statement of profit or loss. Revenue less cost of sales. Okay, opening inventory, add purchases given to you directly, less closing inventory. You have to find this. Okay, this is the last item, and then you have the gross profit. Okay, so revenue 240,000, purchases 196,500. Okay, and then opening inventory 175. Okay, and mark up 20%. So 240,000. Okay, and then opening inventory 17500, purchases 196,500. Okay, again, if markup is 20%, so cost will be 100, gross profit 20. So here, revenue will be 120% of your cost. Okay, markup and margin. Okay, we have to be careful. Okay, so 240. That is, you have 200,000 for your cost of sales, 40,000 for your gross profit. Okay, and if you calculate 3% margin to your net profit, so 240, 3% will be 7,200. Okay, so this time you're given 7,200. Okay, I wonder if it will balance or not. Okay, so let us skip it for now. We have to calculate closing inventory first. Inventory 200,000 cost of sales, and then minus the purchases and also the opening inventory, you have 140,000. Okay, I will always check. Okay, because if we calculate backward, it is very easy to have mistakes. Yes, correct. Okay, so I said we have to check whether net profit is really equal to 7,200. Okay, how to check? Okay, the item that is left is expenses. Okay, so let us see if after we calculate expense, okay, it will be equal to 7,200 net profit. Okay, so how? Here we have in our payments office expenses 27550. We don't have any opening nor given any closing balance of accruals and prepayments. Okay, so 27550 payment for expenses. Okay, we have non-cash expense as well. Okay, irrecoverable debt 500. Okay, allowance for doubtful debt 510, and then also depreciation. Okay, depreciation 10%, reducing balance method. So let us go back to the first page. Okay, originally we have machine, this one. Okay, and then we further purchased 10,000. Okay, we'll need this information as well, because we have to prepare the statement of financial position. Okay, so now it is 50,000 cost minus 7,600. Okay, again 50,000 cost minus 7,600, you have 424, and then 10%. Okay, that will give you 4240 for depreciation. Okay, so let us mark down these few figures. Office expense 27550. Okay, and then irrecoverable debt 500. Okay, 510 for increase in allowance for doubtful debt, 4240 for depreciation. We have 4 expense. Okay, so here, let us see. Okay, if we continue, then we have 27550 here, 500, 510, and also 4240. Okay, total expenses being 32800. Okay, so 40,000 minus the total expenses, yes, 7,200. I am worried because if this doesn't add up, that means okay, one piece of information is not given to us, either an accrual or prepayment. Okay, so now it's balanced. Okay, we don't have to worry. Let us move on to the statement of financial position. 3 column. Okay, we need the cost, accumulated depreciation, and carrying value. $50,000 here. Okay, and what is the amount? Okay, 7600 and then 4240 for accumulated depreciation. Okay, so we have 11840. Okay, that would give you 38160. Okay, and this is asset. What is the name of the asset given? It is machinery. Okay, so next we have current assets, inventory 14,000, a trade receivables less allowance for doubtful debt. Okay, so I do not know if we have positive bank or negative bank balance. We'll calculate later. So let us quote these two figures first. Closing inventory 14,000. Okay, and then trade receivables. Trade receivables 19,000. Okay, how about allowance for doubtful debt? Originally it is 1250, add 510 to it. 1250, add 510. We have 1760. Okay, 1760. 1760, 19,000 here. So 17240. Okay, how about bank balance? Okay, let us go back. Okay, originally, okay, let me use light blue. Okay, we have bank balance of 2850. So 2850 here. Add receipts minus all the payments. Okay, that will give you 5,300. $5,300 bank. So total assets $36,540 at 38160. Okay, it's 74700. Okay, so asset finish. Next part we have equity and liabilities. Okay, so equity first. Net profit less drawings closing. Okay, we don't have much items for liabilities. Okay, we don't have trade payables. Okay, so as I remember, we have opening equity, I don't know how much, net profit 77,200, and then drawings being 5,000. Okay, so let us look at the remaining two items. Opening equity 47250. Okay, and then closing trade payables 25250. Okay, so opening equity 47250, and then trade payables we have 25250. Okay, let's see if we can balance. 47250, 7,200, 5,000. We have 49450. Add trade payables. Okay, will be 74700. Okay, that is balanced. Okay, so total equity and liabilities. Okay, it's done. Okay, so last question, statement of cash flows. Okay, so statement of cash flows. We have opening and closing balance. Okay, some additional information. Okay, and then prepare the statement of cash flows. Okay, directly ask you to prepare this statement for 13 marks. And then we have 5 points for evaluation. Okay, so let's start. Maybe A and B, okay. So bank loan, we have a decrease of 10,000. Financing activities negative, a repayment of bank loan, bank overdraft and cash. Okay, bank overdraft. So originally we have negative 45200. Now we have 10,000 negative. There is an increase of 35200. Okay, machine, and then ordinary shares. We'll have to see what is given there. Okay, land and buildings, accumulated depreciation and its cost. Okay, share premium as well. Okay, so land was revalued upwards by 100,000. So land here plus 100. Okay, machine with a carrying value and accumulated depreciation was sold for that much. Okay, so 3500 investing. Okay, 8100 and then 1900 here. Actually, we don't need disposal gain loss. Okay, so I'm not going to use our time to calculate because it is in the operating activities, and operating cash flows is given to you directly. Okay, so I'll skip this part. Okay, but then this should be adjusted in the machinery figures. Okay, the cost minus 8100, accumulated depreciation minus this one. Okay, so we have to calculate the addition. Okay, so 100,000 minus 8,100. Okay, and we have 115,000. So the difference is you add 23100. These are payments to acquire your new machinery. Okay, so let me calculate again to make sure it's correct. Minus 8100, 23100. Yes. Okay, accumulated depreciation we don't have to calculate because we don't need depreciation. Okay, so here we finish these two. Okay, but then land and buildings, let's see, from 500,000 we add 100 more thousand for revaluation upwards. Okay, but then we still need to add 95,000 further because of the investment. Okay, so next, no other disposal, finish. Depreciation charge for the year, I don't need it. Okay, no dividend paid during the year. Okay, you are told nothing about the ordinary shares and share premium, so you just calculate the difference. It is 100,000 issue of shares, 50,000, so the two added together 150,000 for the issue of shares, financing activities, no dividend. Okay, although you are not required to work on depreciation, but then it's still good to see if it balances. Okay, so it says machinery 4520. Let us see, 27100 minus 1900 plus 4520. Yes, it is equal to the closing balance. And also for land and buildings, plus 12000. Yes, it is equal to the closing balance of accumulated depreciation. Okay, so let us start. Okay, the net cash flows from operating activities 93600. That will be our first figure here. $93600. That is our net cash from operating activities. Okay, so next one we have cash flows from investing. Okay, that would be add proceeds from disposal of machinery, and then less acquisition of machinery, less acquisition of land and buildings. Okay, so these three figures. $3500, machinery acquisition 23100, and then land and buildings acquisition 95,000. Okay, so 95,000. Here we have 3500 to 3100. $114,600. Negative, of course. Okay, net cash used in investing activities. Okay, next you have financing. You only have two items. That is issue of shares 150,000, and then less repayment of bank loan. Okay, repayment of bank loan, I don't remember. Okay, we have 100,000. Okay, and then 45200, 10,000. Okay, 100,000 here. Okay, so you have 50,000 positive. That will be net cash from financing. Okay, as we have net increase. Okay, it is an increase, yes, in cash and cash equivalent. Okay, and also cash and cash equivalent on 31st March year 2017, 1st of April year 2016. Okay, the two balances 45200 negative, and then closing 10,000 negative. Okay, so let's see if it is equal. 93600 minus 114 plus 50,000. Oops. 93600 minus 114. Let me check. Okay, oh, here. A profit of 3500. Okay, so here. 3500. Okay, so 8100 minus 1900. We have carrying value of 6200. Okay, we have a profit of 3500. Okay, that means our proceeds is 9000. Is it? Accumulated depreciation. Let me calculate again. 8100 1900 6200. Carrying value. What happened? Here, carrying value. Okay, this one and this one. Okay, we have to be careful. I am being careless in this case. Okay, 8100 here. Okay, so 3500 and 8100. Okay, that would give a proceed of 11600. First thing. Okay, second thing, the cost. Okay, the cost is not 8100. The carrying value of the disposed asset is 8100. Okay, and accumulated depreciation, this one. Okay, that means the cost of the disposed asset is 10,000. Okay, that means here we also need to change it. Okay, add 10,000. Okay, so 100,000 minus 10,000. That means 90,000. Okay, and then 115. Okay, that is a purchase of 25,000. Okay, so 25,000 as the purchase of machinery, 11600 as the proceeds. Okay, here, let us come back. Okay, here, these two items. Okay, and these two. Okay, so proceeds 11600, purchase 25,000. Okay, 116 minus 25,000 minus 95,000. That will give you 108,400. Okay, so let's see if it is correct this time. 93600 plus 50,000. Okay, that will give you 352. Yes, 35200. Okay, so statement of cash flows done. Okay, after some accident. Okay, next part, evaluate whether this company will be successful in obtaining a loan. Okay, the company has applied for a loan to finance a project. Okay, will it be successful? So let's look at the original information first. Okay, we have a repayment of bank loan of 100,000. Okay, you still can repay. Okay, but then you see this time we have as at year end we have an overdraft of 10,000. Okay, maybe not too large because you have ordinary shares and share premium together. You have 55,000. Okay, that is a small percentage of bank overdraft. Okay, and for your bank loan, okay, it's not a high value. Okay, the gearing is quite low. Okay, that means the proportion of your loan to your capital is not that great. Okay, and because you can see we have a positive cash flows from operating activities. Okay, hopefully you also have a net profit for the business. Okay, I think you would not have too much trouble for obtaining this loan. Okay, except that okay, you have a bank overdraft, okay, which will pose some risk on the bank if they borrow you and you can't repay. Okay, but overall speaking, I can see that it is normal. Okay, you have positive operating cash flows, and you invest in your company by purchasing machinery and land and buildings. That means you are expanding. Okay, so I think you have a good chance of obtaining this loan. Okay, and you have to give points. Okay, just like what I did. Okay, so we have finished this paper. Okay, this is our 25th sets of paper. That means 5/6 of our target is met. Okay, we still have 5 more to go before our exam on, when is it? The 4th of April. The 4th of September. Okay, so see you tomorrow. We will begin again tomorrow with another set of paper. Okay, for our 26th set of paper. Okay, so goodbye.